Hi, Geoff.
Hi, Lenka. Hi, Sam. I think we're live and going out to the world, which is fantastic. So thank you for that. A couple of things today, of course, that are coming up. I would like very much to report to you that the war in Ukraine is over, that central banks have got inflation and interest rates at 2.5%, that COVID-19 is a bygone, that supply chains around the world have been restored, that little rocket man has lost the ability and the inclination to play with nuclear weapons, that global economies are robust, that climate change doesn't exist, and that energy costs have halved, etc., etc. That's what I'd like to report. But the reality, of course, is somewhat more sobering than that. And really, where would we be if we had no fundamental anomalies to play with as traders? Well, in this session, we're going to get a cross-section, really, of ideas for the week ahead from three separate senior traders, one of whom ignores fundamentals, the second of which counts them as first priority in his analysis, and the third who uses a snippet of them to add flavour to the main event. So let's kick it off with someone who really ignores them, don't you, Lenka? As we say hi to Lenka in Sydney. How you doing, mate? I can't hear Lenka for some reason, because Lenka's muted.
Oh, yeah. Sorry about that.
There you go. That's
yes,
okay.
Hello. Hey, Geoff. Yes, definitely only looking at the chart, so no fundamentals here considered.
As I say, it would be a very, very boring world if we all did the same thing. So
Indeed.
Let's see. What have you got for the week ahead, mate? What's looking good?
Okay, let me just share my screen. All right. So, so this week I'm going to be looking at Gbp Jpy, and this is what I'm looking at. I'm going to be looking at short. So what I'm looking at is that little band of where we've been as a little range. So we are at the moment at the top. Now, it was a bullish engulfing bar, but again, we had one before, and it came back to that resistance line and came back. So what I'm looking at is to see if that pattern indeed repeats again. And so on the daily, the price might go higher, same as before over here, where it goes above that range. But what I'll be looking for on the 4-hourly chart is the price to either bounce off that top resistance or go through and come back. So I'm looking for basically a pushback from the resistance or a false break, then a retest at around that line, or a lower high to look for short back to the bottom of that range. So that's kind
of need a little bit of something from this pair, don't we, Lenka? It's very much a case of what charts at the 4-hour.
Yeah.
2, 4, 6 last 8 candles. You wouldn't want to be banking on those, would you? Really, at the end of the day, we need to see something a little bit more conclusive than that.
Yeah. So we need something more. This is not something that's going to, probably set up in the next day or two. That might take a little while, but that's what I'm looking for there.
Cool.
Similarly, obviously, Euro JPY, similar in terms of they're correlated. So again, seeing that level of resistance there and looking for that to go lower. Again, we have strong price action in the upward direction, which it's possible it could go there. But if it does, I'm not looking to go long until it's above that second level and that does a retest. So I'm still looking for short at this point in time. Looking for the price to go again below, coming back below that level a lower high and then looking for short after that. The other one I'm looking at is Euro GBP. And Euro GBP, I'm looking for short there as well. So we've had that big pushback all the way. That was a move last week. So now looking at below that level, we might see the price go a little bit higher, maybe a false break of that mother bar, and then we'll be looking at short after that. So on the 4-hour chart, it would be somewhere near that level of the trend line there, or it could be around the horizontal level. And the last one I'm looking at this week is going to be Gbp Cad. And Gbp Cad, I'll be looking at long opportunities here. So we had a big pushback back into that previous level. So now looking at the price action here is also in the upward momentum. So looking on the 4-hourly for a pullback to this trading line or to the horizontal, and then I will be looking for long opportunities after that, obviously if there is price action supporting it at that point. So those are the 4 pairs for me for the upcoming week.
Yeah, look, a little bit like a football with nails in it, I reckon, the pound at the moment. It's very hard to catch. And
it is,
it's just really all over the shop. It finds a little bit of confidence. We have changes with prime ministers, queens die, and I mean, full respect, there's no way you can get around those sort of things. But it seems to be all over the place. The economy is all over the place, and Ash will probably tell us a little bit more about that in a minute. But let's hope it can produce something for you and for us as the week progresses. Thanks very much, mate. How's the weather in Sydney?
Thank you. Yeah, it's been great. Went to Luna Park today, had a great family time. Went to the beach yesterday. It was lovely. Yeah.
Okay. Nobody living in Melbourne could say exactly the same thing, I'm sure. Nor in northern Tasmania, I've got to say. Very, very wet up there. All right. Thanks, mate. Have a great week.
You're welcome. Thanks, you too.
All right. Let's slice across to where? Brighton in the UK, where Ash is
I am here, mate. I
is he back from the beach?
Video. My video's been stopped by the host. Which is
you.
Okay.
I'm not the host, am I? No, I'm not. I'm the co-host. Oh, Sam will fix it up for you straight away. There you go.
We're on. We are on. Okay.
I can't hear any seagulls, mate. You got the window open? Or?
No, they're very quiet at the minute. I don't. It's winter now. Well, it's not winter, but it's getting close. Getting close to winter, so they're probably there's a few pigeons around, but the seagulls have decided to migrate. I think go to probably off to Australia to see you, Lenka. Actually, go somewhere a bit warmer.
Yeah,
it's getting warmer.
It's been good here for the last couple of days, but we had a lot of rain, so it wasn't that great before.
Oh yeah,
enjoying it now.
Yeah, it's pretty hideous. So they got all sorts of problems. Because I went to Crete recently, there's a story about Crete having flash flooding as well. So there's some pretty horrific things probably on their way here, I would have thought, pretty soon.
The old climate change is at play, do you think? Or is it just the seasonal stuff that we're getting? Speaking of which, there's a lead into market data.
Yes. Well, okay, man. Well, do you know that there's some really interesting things to talk about today, because last week, as you know, I've been sort of like looking at seeing if there were any opportunities to go long on the stock market, but absolutely terrible, really. Now, I'm going to sort of show you a couple of things. So we're going to talk about the FTSE. And we'll talk about the Nasdaq as well, because it's quite useful really to sort of give us a gauge of sentiment, of confidence out there, because it is the risk on index really of the planet. So last week on the FTSE, now when we look at this data down here, this is our volume. Now this volume, if we compare it to the prior 3 months, there was a volume spike on this particular bar here on the FTSE 100, which showed that expectation was for the FTSE to start to rally. But the very next day, this happened, and it's on equal high volume. So straight away, we're looking next week at potential shorts in the FTSE, and we'll bring the Nasdaq in a moment. But let's talk about why, really, if we sort of think about the global situation and global equities, why things are moving in the way they're moving. And it's really about back to the kind of old adage of inflation and what's happening with the central banks. So if we have a look at last week's data and what was starting to move things with the FTSE. Now, last week we had this situation with the pound, where Kwasi Kwarteng, the Chancellor of the Exchequer, released a mini budget suggesting that there would be a lower rate of tax for the highest earners. The market hated it, and it prompted the Bank of England to come out and say that they would be buying treasuries on the long end of the curve, just to try and calm the markets down a little bit. It did a lot of things. We saw the pound getting very, very volatile and going this way and that way. Now we got a new chancellor. So this week this weekend we had a new chancellor announced, and it's Jeremy Hunt, and straight away he's come out and saying we're not lowering the highest rate of tax, and there's a big chance that the taxes will probably be risen rather than quashed. Now, that should initially raise the price of the pound. That should be quite bullish for the pound. So we'll see what happens off the back of that. But the reason it's going to be bullish for the pound is that it probably then puts the Bank of England back in the hot seat to say, you are free now to raise interest rates, forget the long end of the curve stuff, and you can deal with the market that you should be able to deal with. Initially, it's sent global waves around to suggest that if a central bank is going to be buying on the long end of the curve, they are going to get more dovish, and that might well filter into everybody else, which is why we saw some bullish price action on the FTSE, the Nasdaq, and everything else. But now with those guys back in play, that should be quite negative. And if we look at what really happened from the United States, we had PPI data coming in 0.4%. So it was from negative 0.2% to 4%. Now, PPI data is inflation. So inflation, hot. Central bank, raise interest rates, bad for the stock market. FOMC minutes, reiterating, we're going to keep going. Forget sort of like thinking you're going to get comfortable. We're going and we're going to go hard. Bad for the stock market. CPI data, month on month, 0.4% from 0.1. Hot, inflation up, suggesting central banks raise interest rates, bad for the stock market. Now, that was on Thursday. And then on Friday, we had retail sales coming out at 0 and core retail sales at 0.1. So core retail sales is what they tend to look at. And we had consumer confidence coming out at 59.8 from 58.6. Decent consumer, puts the central bank on high interest rates, bad for the stock market. So what we've basically seen this week is a catalogue of things coming out and saying central banks are not going to help you guys out. Forget buying stocks, because stocks are not going to be worth the same as holding your money either in cash or maybe even in a bond. You know, we see the bond yields kind of going crazy right now. So the stock market looks in terrible shape, mate. That's the sort of like the long and the short of it. Now, if we bring in the Nasdaq and get a clearer picture about sentiment, you know, overall sentiment, then let me see if I can bring in my whole screen. We can. This is what we got going on. Same thing with the Nasdaq. Saw a decent bar, not on quite as good volume, to be fair, but a decent bar on Thursday. That consumer sentiment came out and it just got obliterated again. Very negative looking bar. The Nasdaq currently sits at significant levels along here. which makes it very difficult to short, very, very difficult to short, you know, because it could fly in the opposite direction at any point. And you see that with a price action on a day-by-day basis. Look at this. This is CPI data release. CPI data comes out, it comes down. Then all of a sudden, for whatever reason, the market decides that maybe the central banks won't be raising interest rates. I think that might have been to do with what was going on in the UK. Then they buy things back up again. But we are back down. And that is suggesting that, and look, a little gap. I mean, that is very unusual during an intraday move to see a gap in the market there. And that intraday gap suggests that there is aggressive selling going on. So very little suggests that we should be buying stocks right now. Very, very little. And you know, and you include the fundamental aspect as well. If we look at the COT data shows us, let's change this back to a daily chart. The COT data shows us that just going into the week that it was starting to weaken. Now, it's not at this extreme here, but what we are seeing is a string of more confident COT data to starting to come in. And then all of a sudden, is this a little bit of a key to suggest that any sort of now this COT data is week on week, and it started on in the middle of September, so around about this point here. So as this started to fall, the speculators were basically saying this will hold. This is going to hold, no problem at all. But what happened was it had a little bounce, and then it started to come down again, really into last week. Are they now saying, okay, this is possibly panic stations, this isn't going to hold, we might need to flip positions? Because if you look at what happened here, this was back in, this was in March, and then the market started to drift down sort of like on the 23rd of March, and that will coincide with March is here. Here, they started to buy it up, but by the 23rd, which is there, they started to get very, very concerned, you know. So that they were quite happy with the rally, buy it up into the rally, but then tank it down, you know. And even when they were buying in this particular period, which is really through May, which is starting around about here, the market came down a little bit, then it came up a shade, but then they started to panic again and start to sell it off. Is this what's happening here? You know, the market managed to hold up a little bit. They managed to clear out some positions. Now they're flipping positions. I mean, that's not a huge decrease. It's not like this one, where it's just out and out panic. But it does suggest that there could be a little pattern forming here where they buy it up for a period, maybe get some people involved, and then they start to sell it off. Now, as I say, mate, difficult at this particular level to short this market. But nothing is suggesting that we should be buying it. Nothing, which tells us that if we can get a decent price and we can maybe use the correct money management, making sure that we're not over leveraged, that the only place really that we should be looking is for a short. There's CPI data due from Canada and the United Kingdom this week. From the United Kingdom, it's stated to go to 10%. Again, not particularly good for the stock market. So if we're looking to play the stock market this week, and I know this is more about the FTSE, but you know we do need to check the other markets, Nasdaq included. The FTSE does suggest downside. We always have to consider oil, and the reason that we always have to consider oil is that the two biggest companies, or two of the biggest companies in the FTSE 100, are BP and Shell, and they are oil companies. And if we were to look at all the data, I know we don't have time now, but if we were to look at all the data, what we would see is a weakening of an economic global picture while interest rates are going up. That suggests recession. That suggests lower prices in oil, even with OPEC Plus and all their jiggery pokery. It still suggests lower prices in oil, which again would filter back through to the FTSE 100 being weaker. So this week, mate, looking at market index coming down.
Yeah, I was saying at the head of the show that there's a fundamental versus technical flavor about the traders that are in the room tonight. Lenka, of course, being a pure technical trader, yourself relying very heavily on fundamentals before you look at technicals, and myself a little snippet of fundamentals, but mainly technical. And it's now, if you look at that Nasdaq chart as you were before, as you say, it all looks very, 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 very bearish. But to go short right now because of the technical level is just so dangerous.
Yeah. Yeah, it is. And you know, one trade you can always do is a spread trade where you go Nasdaq short, FTSE long. But even that is difficult because if the Nasdaq, you know, if something happens, now we were just talking in the Elite Trader Support about how a speech can change everything. And even though the data suggests one thing, a central banker can come out, and we saw it with the pound, right? So we saw it with the UK. When Bailey came out and said, look, we're going to have to prop this market up a little bit, we started to see some risk sentiment going in the opposite direction. Now, of course, something could happen this week which completely changes the dynamic and it completely changes the terrain. You know, that maybe there is some relief in the situation in Ukraine. Maybe OPEC Plus come out and say something else. Maybe one of the central banks come out and say, actually, maybe we won't be able to go any further than 4.25% in interest rate, and that would probably strengthen the Nasdaq. So we don't know if somebody's going to say something, which makes it difficult, because if somebody sniffs at any kind of dovish pivot, the Nasdaq's going to fly, and you can get caught into a short and be, you know, run over. So that's why shorting is very difficult here. But going long, without those factors, without a central banker coming out and saying something dovish, is not going to happen. You know, we can't say that anything with 100% confidence, but it's very unlikely to happen that this thing can go long. So as a trader, where does that leave you? Well, it leaves you with a situation where you've got to be very cautious and you've got to make sure that you've got your money management tight. You know, that doesn't mean tight stops necessarily. It just means that you've got to be right on top of the way that you're going to approach the market, the way that you're going to handle it if it goes in the opposite direction, and your psychological, you know, approach at this particular point. So it doesn't mean don't trade. You know, I think you know, not trading is not the best option. I think sort of trying to find stuff is the right thing to do, but be very careful if your expectation is that you are going to make, you know, that the market is going to either fly or fly without any kind of response, because at any point it could flip around and do something dangerous. So just make sure your money management's tight and your psychology is correct as you go into this week, because I think it could be an interesting one. And I tell you what, mate, the data this week is thick. You know, we are talking about heavy stuff. We're talking about CPI data, which is driving this stuff right now. It's driving this market hard. So we're talking about CPI data from a number of countries. And it does mean that this week is, you know, potentially, as this market has been for a number of months, it's going to be a challenge. So make sure that you're ready, and make sure you're ready to lose. That's a big thing. Make sure you're ready to lose and you can accept it, and it's not a big deal, because the market calms down and it makes things a lot easier. So and on the flip of that, make sure you're ready to win, because you know that can also have a psychological impact. So psychology is going to be key, I think, this week.
Mate, sounds like a good week ahead. You're talking all this movement, and we could be part of all of that. And as you say, if you get it wrong, make sure that you've got that risk management under control, because that's what the key is here in a market such as this. Get your risk under control before you enter the market, rather than think about it once you're in it. And that'll be the key, I think. Yeah. All right, buddy. Have a great week. We'll catch you tomorrow in Trading Buddies at, I won't say what time because you'll be confused because daylight saving, won't you? Well, I am. 5 to 3, Singapore and Hong Kong time. That's all I can tell you. And 5 minutes before London.
We haven't got daylight saving yet here, mate. No,
I know. It's a couple of weeks away, isn't it?
Oh, cool. Okay.
I told you you'd be confused. All right, thanks. I'm going to turn that around just a little bit with my preview of the week. And I'm not going to turn it on its head, what you've just said. But what I am going to do is give you a different perspective on how to actually judge all of that in terms of the indices. And it's all about looking at this chart, in my humble opinion. it's the dollar index. So a lot of these things will be driven by what the dollar does. And the dollar, I'm looking at the monthly chart here, and the reason I'm looking at the monthly chart is actually you and I spoke about this level a long time ago, probably weeks and months ago. It's 113. It's the last line of defense for the world against the US dollar, in my humble opinion. So if it gets through here, it's going to this level here, it's going to challenge these highs. So to my mind, it is the last line of defense. So we're going to go from 113 to 119. And if you have a look at the smaller time frames, you see how hard this market has been trying to get through this level. There it is up there. I don't know why I've got that one, but there's that level there. So it's been struggling its little butt off trying to get through this level, and it just can't. It cannot. And because of the parabolic nature of this move on the US dollar, which is, I've got to bring this level into play. And I've got to be thinking that if it can't get through this 113, then it's coming back to either here or here. I can't quite get that level right, but I'll call it there for now, 109, 110 area. Hasn't been on this trend line for a while, and I'm pretty confident that if we can find a lower high, maybe this is it, I don't know. We've got a reversal bar there, and then we've got all of this mess going on at this 113 level. But I think if we can find a lower high here, we can confidently trade this down to this level. So I think there's plenty of money in there somewhere. We've just got to find the setup, as far as I'm concerned. Of course, that relates 100% to what Ash was talking about, and the fundamentals notwithstanding, I find that the best chart this week is going to be silver. And the reason for that, and we said exactly the same thing last week, it was my chart of the week, I think, where we were up here and we were looking for a lower high to get short. Well, the lower high never came. It just never came. It just sold off and sold off and sold off every single day. But the market structure is currently holding. And one of two things, of course, is going to happen here. It's going to break these lows, or it's going to come back into that range. If it comes back into that range, I'm a buyer of silver. Take that into consideration. Well, this is silver versus the US dollar, right? Take that into consideration when I've just talked about the dollar index and how it's at a strong resistance level, can't get through it. Then I think this may well be a proxy for the US dollar, if you can find a way into this one. So if you can't find a way into the dollar index, then maybe you can find a way into silver long. Now, do I think it's going to reverse and go a million miles? No, I don't. I think it's a range trade, nothing more than that. And I'll be looking to trade certainly to here in the first instance, and maybe even up to here. If it does reverse, then maybe it's worth leaving something on the table to get it way up to here. The other one I find interesting, and this is going to rely heavily on trusting the euro, and I find that very, very difficult to do at the moment. But it's also got to do with not trusting the CAD. And my absolute feeling is, long term, I'd much rather be trading the CAD than I would be trading the euro. That said, the technical situation here is such that I actually placed an order last week on this pair based on this chart, the weekly chart. Hang on, I'll get rid of that. No, I'm
going to need to go, mate. Sorry, I've got to take Molly to gym.
Oh, sorry, mate. Push off. Yep.
All right.
Tomorrow.
Thanks, guys. See you soon.
See you, mate.
Bye, Lenka.
Bye, Ash.
So this is what happened last week. We had this massive bull bar the week before, and then we had an inside bar the week after, which is, in my world of slingshot trading, a buy. So I placed an order long here, stop loss here. Didn't quite get to my entry. Of course, that has now expired. If tomorrow morning I see nothing in terms of a gap, then I'll replace that order long above here, stop loss in the same place. Won't really matter where the stop loss is, because if I'm wrong, it's going to go in the opposite direction, right, and take me out no matter where it is. But I think this is a replica of this one, really, where we broke above the range, came back and retested it, and put in that big bull bar. This is pretty much exactly the same thing. It's now broken the trend line or trade line. It's also broken the previous support level, then come back and retested that exact level. And I think there's a buying opportunity there, as I placed last week. Would I like to reconsider if the market gaps above me? Too late then. I'd have to wait for it to come back. This is now a daily chart, which is far more messy than the weekly. Weekly, I think, is where you need to stick, and just depending on what happens in the morning as to whether I replace that order. There are quite a few on the list that I look at early in the week, and they all involve the pound. Link has been through the pound, and as I said, it's very, very hard one to catch at the moment. You see that setup that I just showed you on Euro Cad, where it broken through the trade line, come back and retested it. Well, pound Cad hasn't broken through the trade line at that point, but now it has. So I'll be looking for exactly the same thing as I saw on Euro Cad to trade this. As I say, as always, one or two things are going to happen. It's going to come back and retest it, or it's going to go. There's nothing surer than that, in my humble opinion. But if it came back below that trade line as a third option, then I'll be looking to trade that short. But at the moment, I'll be looking for a pullback to the trade line. Pound Swiss is another, suggesting that we do go long. Tough to trust at that level. And the reason is because it is retesting a support level. So really tough to go long there for me at the moment. I would have to see price get above that line, come back and retest it. Pound yen, Lenka talked about this one. Weekly chart's telling me to go long. It's impossible for me to go long at this level. It's just not a thing. I can't trade into these highs. So I've got to wait till either one of these, well, sorry, that trend line doesn't exist anymore. That can go. I'm going to wait for a false break here to trade it short, or take out the highs, pull back and get there to trade it long. They're the only two options I've got. The reason I'm pointing these out is because they are exactly what I follow each and every week when I do my setups. They're called game changers, and they're based on what the previous week's candle's done. This previous week is suggesting that we go long. On the others, Euro Cad is also suggesting that we go long, and they're the candles that I look for. Don't necessarily trade them as such, but they're giving me a directional bias for the week. So best case scenario is for this to actually pull back and give me a setup on a smaller time frame. Then I can look to trade it in the direction that that candle's pointing. Obviously, it's backing up this massive thing that happened 3 weeks ago. So directional bias there is long. As I say, intrinsically, Euro versus the CAD, no, I'm not thinking long term. It just doesn't make sense to me. There are two others on my watch list. As I said, silver's the best of them. But there are two others on my watch list. One is Euro Swissy, one is Euro Yen. Why? Well, Euro Swissy the week before, reversal bar suggesting that we go short. Then we got an inside bar. Now this to me is crucial. And if you've got a bias based on primary trend, and primary trend is telling me short here, then I look for exactly what we're seeing here. Reversal bar followed by an inside bar. What that's telling me is the bulls could not take out the high. And for that reason, I believe the reversal bar is absolutely poignant. And for that reason, if I didn't get a gap in the market in the morning, or if I don't get a gap in the market in the morning, I'd be placing a short underneath that bar, stop loss probably above that one, taking profit at the open of that one, leaving something open in case this does go with trend. But that's what I'm seeing here. On Euro Swissy, Euro Yen is, of course, related, because the yen and the Swissy are considered to be risk-off currencies. I'm not saying the euro is considered to be risk on, but you're trading the euro against two risk off currencies. Impossible for me to trade this as a game changer bar because it's in the wrong direction. I've got no idea why I've got this on here, actually. Scrub that, guys. I've got no interest in trading this at all. I thought it was an inside bar that I was looking at based on exactly the reversal bar and the one we saw on the euro Swissy. Cancel what I said about euro yen. It's not happening. Not going to trade it at all. And that brings us to our conclusion, guys. My best one, as I said, for the week is silver versus the dollar. And if I do see it's come back in here and give me a higher low, particularly on a daily time frame, I'll be looking to trade it long, but I'll be looking to get out up here somewhere because I don't trust this to go long term. I do trust it to go to the top of the range, however, and that's what I'd like to trade. All right, that is the show for the week. Sorry, I have run over a little bit. I do prattle on when I get to talking about charts, of course. That is my nature. Thank you, Lenka, for your insights, as always. Thanks to Ash, who had to dash off and take her daughter to, or his daughter, to somewhere. Can't remember where, probably the beach. And, of course, Sam, thank you for looking after us for the show. Everyone else, thank you for your attendance. Richard, thank you. And have a great week ahead. Bye-bye.